Ever pondered the idea of investing in cryptocurrency ETFs? Well, you're not alone. Cryptocurrency ETFs, or exchange-traded funds, are gaining traction as a potential solution for those intrigued by the crypto market but overwhelmed by its complexity. These funds offer a unique opportunity to gain exposure to a basket of cryptocurrencies and the underlying blockchain technology, all in one fell swoop. Imagine being able to tap into the potential of Bitcoin, Ethereum, and other altcoins without having to navigate the intricacies of each individual coin. Sounds appealing, right? Unfortunately, for our friends in the United States, direct cryptocurrency ETFs are currently off the table, as the Securities and Exchange Commission has yet to give them the green light. But fear not, alternatives do exist, such as the Grayscale Bitcoin Trust, though they come with their own unique set of considerations. Now, if this piques your interest, we will delve into the top 7 cryptocurrency ETFs available. First on our list is the Amplify Transformational Data Sharing ETF. This investment fund is an intriguing choice for those eager to delve into the world of crypto, offering exposure to a wide range of aspects within this dynamic industry. The Amplify ETF is known for its potential to provide a diversified portfolio, allowing investors to tap into the burgeoning world of cryptocurrencies and blockchain technology without needing to buy individual cryptocurrencies. This is a major plus for those who want to avoid the volatility of direct crypto investments. On the flip side, like any investment, it carries risks. It's subject to market fluctuations and the inherent unpredictability of the crypto sphere. It's also worth noting that the fund's exposure to the crypto industry is indirect, through companies involved in crypto and blockchain, rather than through direct cryptocurrency holdings. As for the dividend payout, the Amplify ETF is more growth-oriented, meaning it primarily reinvests any earnings back into the fund rather than paying them out as dividends. So, if you're an investor looking for regular income, this might not be your first choice. That's a brief on the Amplify ETF. Now, let's move on to our next contender. Next up, we have the Bitwise 10 Crypto Index Fund. This ETF is a popular choice among investors for its unique approach to cryptocurrency diversification. It aims to track the performance of the top 10 cryptocurrencies in the market, providing a broad exposure to the digital currency world. One of the key advantages of the Bitwise 10 Crypto Index Fund is its diversified portfolio. It doesn't put all its eggs in one basket, instead spreading the risk across multiple digital currencies. This can be a boon for investors looking for a more balanced and less risky approach to investing in cryptocurrencies. However, like all investments, it's not without its downsides. For one, the fund's performance is tied to the volatility of the crypto market, which can be a double-edged sword. If the crypto market takes a downturn, so too will the Bitwise 10 Crypto Index Fund. In terms of dividend payout, the Bitwise 10 Crypto Index Fund does not typically offer a dividend. This is because most cryptocurrencies do not generate cash flows like traditional stocks do, making it difficult to provide a dividend to investors. Despite this, the fund's unique features and holdings make it a compelling option for those looking to dip their toes into the crypto market. It offers exposure to a wide array of cryptocurrencies, including Bitcoin, Ethereum, and many others, providing a broad and diversified investment opportunity. That wraps up the Bitwise 10 Crypto Index Fund. Shall we proceed to the next one? Our third ETF is the Siren NASDAQ NextGen Economy ETF. Now this one is particularly intriguing. It offers a unique advantage to investors by providing exposure to companies that are primarily involved in the blockchain ecosystem. This means you're not just investing in cryptocurrencies, but in the underlying technology that powers them. The pros of the Siren NASDAQ NextGen Economy ETF mainly revolve around its broad exposure to the blockchain sector. It allows investors to bet on the technology that could potentially revolutionize industries beyond finance, from supply chain management to healthcare and more. It's a way to embrace the future, today. However, it's important to note that this ETF does come with its own set of cons. The most significant one being, the blockchain industry is still in its infancy and can be quite volatile. This means, while there's a potential for high returns, there's also a high risk involved. As for the dividend payout, it's not as consistent as traditional ETFs. This is primarily because many companies in this space are still in their growth phase and prefer reinvesting profits back into their business rather than paying dividends. That's the Siren NASDAQ NextGen Economy ETF for you. Let's move on to the next one. Coming up next is the First Trust Index Innovative Transaction and AMP Process ETF. This ETF offers a unique opportunity as it focuses primarily on companies that are actively involved in the innovative transaction and process space. This includes those engaged in the development and utilization of blockchain technology. The advantage of investing in this ETF lies in its focus on innovation. As we all know, innovation is the driving force behind the rapidly evolving crypto industry, and this ETF offers a direct line to that. However, it's crucial to remember that with innovation comes uncertainty. The crypto market is highly volatile, and the companies this ETF invests in are no exception. As for the dividend payout, it's important to note that this ETF, like many focused on the crypto industry, does not offer a regular dividend. This is because most of the companies in this sector are in their growth phase, reinvesting any profits back into their businesses. So if you're looking for a regular income stream, this might not be the ETF for you. But if you're willing to accept the risks and are excited by the potential of innovative transaction and process technologies, then the First Trust Index ETF could be a compelling addition to your portfolio. That was the First Trust Index ETF. Now, on to the next. Next, we have the Bitwise Crypto Industry Innovators ETF. This ETF is unique because it focuses on companies that are innovators in the cryptocurrency industry. These are companies that have significant portions of their business operations in the crypto sector, or are developing innovative products and services in this space. One of the main advantages of this ETF is its focus on innovation. By investing in companies at the forefront of the crypto industry, you're getting exposure to the potential growth and advancements these businesses may bring about. However, it's crucial to remember that with innovation comes a degree of uncertainty and risk. These companies are often exploring uncharted territories, and their success isn't guaranteed. In terms of dividend payout, the Bitwise Crypto Industry Innovators ETF doesn't currently offer a dividend. This is because most of the companies it invests in are growth-oriented and prefer to reinvest their profits back into their business to fuel further growth, rather than paying out dividends to shareholders. That's the Bitwise Crypto Industry Innovators ETF. Let's move on to the final two. The penultimate ETF on our list is the Global X Blockchain ETF. This ETF offers a unique approach, focusing not solely on cryptocurrencies but on the underlying technology that powers them, the blockchain. Blockchain technology is the backbone of the crypto world, and it's not just for digital currencies. It's a revolutionary technology that's being adopted by industries far and wide, from healthcare to supply chain management, promising transparency and security in transactions. Investing in the Global X Blockchain ETF means you're investing in companies that are at the forefront of this technological revolution. This ETF holds a basket of companies that are actively involved in the development and utilization of blockchain technology. Now let's talk about the pros. First, this ETF offers exposure to a rapidly growing tech sector without the volatility often associated with individual cryptocurrencies. It's a way to invest in the technology that underpins cryptocurrencies without the risk of investing directly in these highly volatile assets. Second, this ETF offers a degree of diversification, as it holds a range of companies involved in blockchain technology from different sectors. But as with any investment, there are also cons. While the blockchain sector is growing, it's still relatively new and may face regulatory hurdles and other uncertainties. In terms of dividends, the Global X Blockchain ETF has an annual dividend yield of around 0.70%. While this isn't particularly high, it's worth remembering that the primary attraction of this ETF is its potential for capital growth rather than income. That was the Global X Blockchain ETF. Now let's move on to our final ETF. Finally, we have the Global X Blockchain and AMP Bitcoin Strategy ETF. This unique fund combines the best of both worlds, offering exposure to the transformative potential of blockchain technology, while also capitalizing on the growth of Bitcoin, the world's largest cryptocurrency. The major advantage of this ETF lies in its dual focus. By investing in both blockchain companies and Bitcoin itself, it offers a balanced approach to the volatile cryptocurrency market. It's like having your cake and eating it too, providing the stability of established blockchain companies with the potential upside of Bitcoin's price movements. However, it's important to remember that with high reward comes high risk. Bitcoin's price can be extremely volatile, and while this can lead to significant gains, it can also mean substantial losses. Furthermore, the ETF's reliance on blockchain companies means it's subject to the broader risks of the tech sector, including regulatory changes and competition. The global X Blockchain and AMP Bitcoin Strategy ETF also offers a dividend payout. While the payout can vary and is dependent on the performance of the underlying assets, it adds an extra layer of potential income for investors. But here's the kicker. The ETF's expense ratio is higher than some other options. This means that a portion of your investment will go towards managing the fund, which can eat into your returns over time. Despite these potential drawbacks, many investors find the global X Blockchain and AMP Bitcoin Strategy ETF to be an exciting opportunity to get involved in the crypto space without having to buy and manage individual cryptocurrencies. That wraps up our list of the top 7 cryptocurrency ETFs. We hope this discussion has enlightened you about the world of cryptocurrency ETFs. We've journeyed through the landscapes of 7 top crypto ETFs, from the Amplify Transformational Data Sharing ETF to the global X Blockchain and AMP Bitcoin Strategy ETF. Each fund offers unique exposure to the crypto world, with varying degrees of risk and reward. Remember, understanding the pros and cons of each ETF, as well as the dividend payout, is key to making informed investment decisions. It's a diverse and dynamic world out there, with each fund offering a unique lens through which to view the ever-evolving crypto market. But, as always, it's crucial to conduct your own research before diving in. While ETFs can be a convenient way to invest in a diversified portfolio of cryptocurrencies, they should be part of a balanced investment strategy. If you found this video helpful, please give it a like and subscribe to Caffeinated Money for more insightful content on finance and investment. Until next time, keep your investments savvy and your coffee strong.